Hello there, Adam Gower here, and welcome to the GowerCrowd Podcast, the real estate crowdfunding show Deal Time, where you can learn about active crowdfunded real estate deals directly from the sponsors themselves. Subscribe to my free weekly newsletter at GowerCrowd.com, where you'll get links to the podcast, as well as news and updates exclusively from the world of real estate crowdfunding. Sign up at GowerCrowd.com so you don't miss out. Also, if you want to pitch your deal on the show, just go to the podcast page at GowerCrowd.com and look for links on how to submit your deal. Please note that while I don't endorse the deal, sell securities, or make investment recommendations of any kind, some sponsors are GowerCrowd clients. Now listen in and learn about the next great deal on the GowerCrowd Deal Time podcast. Here we go. Charlie. Nice to meet you. We chatted already a little bit, didn't we? So now you've got to let us know, please. What is your name, company name, and position, and where are you from? Got to ask that, for heaven's sake.
Well, it's probably pretty obvious, Adam, where I'm from, London, but born and bred Wimbledon. My name's Charlie Rushton. I'm one of the partners at Saber Equity, and we are a vertically integrated real estate investment company.
And you have got a very interesting deal that you're going to be talking about today, Parkway Flats. Tell me what that deal is all about. Tell me first, what is the structure of the deal? Because you've got some co-sponsors, very interesting structure you've got over there.
Yeah, so what we like to do is we realize and see the value in partnering with a lot of different people. But what we specifically look for are people that have, in fairness, got more experience and a deeper knowledge than we have, okay? And we are so proud to be on this team of co-sponsors for this deal because it's a magnificent deal. But we've got Ian Jurek from Jurek Family Offices, and we've got George Abreu, and these guys, George has got his own construction company as well. So when you put these guys together, they are some real heavy hitters. They're probably around 7,000 units counting at the moment collectively. And what we love about them is that they are on the ball asset managers, and the construction arm to George's company brings us a competitive edge when we're rehabbing and being able to source the materials and cut our pricing. So from that perspective, we see a great upside here.
Perfect. So now tell me about the deal, just kind of high level, 50,000 foot. What is Parkway Flats?
So Parkway Flats is a new build, 2017, so Class A, 300 unit multifamily community. It's got all the bells and whistles. It's fantastic, in great shape. Our due diligence was one of the shortest for such a large property ever. It's been kept in fantastic condition. We're acquiring it from the developer directly. So that's kind of given us an added bonus for the value add potential that we have in this deal.
All right, so you got to tell me then, this is a brand new project. You're buying it from the developer. What is the value add? What's the story behind this deal?
Well, so one of our sponsors, Megan, she has a really good relationship with this developer, and this particular developer had built the property. And as you probably know, most developers like to build it, begin lease up, and then pass it on. Well, this developer, he maintained it, held it, and has operated it for the last 3 to 4 years. Now, you know, he's done a great job, but as developers are, they're not multifamily operators, but they're developers. So there's operational differences that we can see that we can bring down the expense ratios, which is going to drive additional value to the NOI. On top of that, you know, when developers build them, they build them, you know, with a vision in mind, and we see that we can with small amounts of incremental investment add to the overall value of the units by enhancing them with backsplashes, upgrading the appliances, you know, things like that, without doing too much structural work.
And you mentioned operational efficiencies. Tell me what you've seen this guy isn't doing right that you can do, that you can add value to.
It's not that he's doing anything wrong, but we see that, for example, payroll, we've slashed our payroll by $80,000. That's a big chunk of change. You know, we will drive the RUBs far more aggressively than some other people, or than the developer has done so far. So it's not that he's not doing certain things or doing anything wrong. It's just that we see that, with the management team and company that we're using, they're very familiar with the area in Houston. I forgot to mention that this is based on the western corridor of Houston. So it's in a very affluent area in the submarket of Briar Forest.
And what is the, give me some high level numbers, right? You told me 300 units, but how much are you buying the asset for? How much are you raising? What are the projected returns? Kind of give me the rundown on the numbers.
So the contract price is 45.6 million. We've got an 80% LTC cost. We're raising thereabouts 11 million, 11 and a quarter. The expected returns are an 8% pref return to the investors, and then anything past that is an 80-20 split. We're not 70-30, we're 80-20, so we're looking after the investors a lot more. We're expecting a 21.5% IRR, internal rate of return, over the life of the investment. And the investment cycle, we're looking at 3 to 5 years. More than likely, well, not more than likely, but hopefully we'll be refinancing around year 2, 2.5, and exiting probably around year 4.5, 5.
And what cap rate are you buying it at?
Well, this is very interesting. This is a great point, because we're actually buying it at a 5.1, but the market valuation is around 4.2. So we're actually buying it at about 29,000 a unit under market value.
So why is he selling it below market? Why would he? I presume it's an off market deal because of your connections.
Yeah, it is completely off market. Relationships. The NOI is we know that where the valuation is there, and we know where we can drive it. So it comes down to negotiations and relationships. He's got a large portfolio, and we see a much longer term relationship evolving from this as well.
Charlie, what is everybody's role in this? Like, what's your job, and how does everybody what are their roles? Right, what's your management team going forwards, and what are their roles?
So, besides George and Ian, who are essentially our co-sponsors and signatories on the loan and so on and so forth, we have Brem Group, which is made up of Megan and her husband Carson. They're going to be the asset management side along with us, since we are Texas-based as well, albeit I'm based in Dallas. And our group has been, along with another group, Jay Dura, we've been charged with the money raising side of it.
Okay, and so going forwards, what are the main things or the main functions that are going to be critical to adding value? Presumably you're doing some upgrades, aren't you? If you can break down, you talked about backsplashes, but let's kind of really drill down this. It's a brand new property. You're going to be adding, and I saw that you're going to be increasing rents, projected $100.
Driving rents. We've got about $100 to $125 a unit per month in room to drive the rents currently, and that's really against market comparisons that we don't really need to do too much rehabs to, but we do want to bring it up to a comparative level to what the market is doing. The other good thing about the area right now is that there's no new builds within a 9-mile radius, and so we've got within a 1-mile radius, we've got a $92,000 average household income, which is pretty extraordinary. So that's where we know that we've got the quality of tenant that we can begin. We can definitely achieve the projected rents that we're looking for. Go ahead.
And the upgrades, you talked about backsplashes, but there's some other things as well, just small things to make a big difference, aren't there? Tell me about those.
So a lot of the units have got little study areas, so we're going to implement and put in granite tops in those areas, as well as the bathrooms to match the kitchens. It's literally backsplashes and appliance upgrades. And there's one area of green untouched green land within the complex area that we're going to convert into a more amenable, attractive communal meeting area that is, is kind of what we're feeling and hearing what the current tenants are looking for, so that they can bring their friends and kind of enjoy that relaxed atmosphere to meet them in.
Exactly. And then you also talk about pets as well, don't you? Some of the current residents walk their pets in this area. That's an interesting angle, actually. I'm going to share with you something that I've learned from another sponsor who is in a completely different part of the world or the country. So I'm not going to be sharing secrets that he would be upset with me sharing with you. But tell me more about that pet area, and I'll show you with.
So we're going to put partial area of what I'm talking about. We're going to convert into a pet area as well. We're going to have a wash station for the dogs, and just make it amenable to the community on site for the pet lovers.
And do you charge more for tenants who have pets?
Yes, we do. We charge it in two different ways. We charge it if they come to us and say, I've got a pet, then we charge them a pet rental fee, a one-off fee, just like a deposit, but it's non-refundable. And then we charge them a $20 a month rent fee to have the pet in their unit.
Interesting. And I know I promised you there wouldn't be any gotchas. So this is so out there, this question. I'm going to ask anyway. Don't worry if you don't know. I wouldn't expect you to. But out of 300 units, do you know how many people have pets currently?
I don't. I would be lying if I tried to say yes.
If you tried to bluff it.
Yeah, you'd know.
So the reason I asked that is quite interesting. So what these guys do, and again, I'm not going to share names or locations or anything. It is non-competitive, so we're all good. Is they actually really positively encourage pet ownership, and what they've found is that they can get up to 30% of tenants have pets, and that would be 100 units for you. Yeah, it's not a huge difference, but at a 5 cap, everything drops to the bottom line. And they have upsells as well. So they sell other stuff to tenants as well, pet related.
Well, so the dog station, the washing station isn't a free utility. There's a fee to be using it, but you call it a convenience fee if you like. But there aren't a lot of places that provide pet washing facilities. And as you probably know, if you're a dog owner, it's not easy to wash your dog, in a complex. So that kind of thing and that level of amenity that we're providing these kind of guests and tenants is kind of what they expect. But they are revenue generating opportunities that we can't miss.
Yeah, that's actually not trivial either. It really
absolutely not.
Can add up. Yeah.
Yeah.
All right. So. Exit plan. Okay, go on. You were going to tell me something.
Well, I haven't mentioned when you asked me about the investment and what have you. So it's 50,000 to get into the investment, which we think is and it is for accredited investors only.
Right.
So it's a Reg D 506C,
mm-hmm.
And we are offering it through our fund, Saber Equity Fund, which is a new fund that we've just launched. This property is available through it. And the beauty of that fund is that it allows you to buy tranches of a deal that you might not otherwise be able to get access to, because either through barriers of entry from the limitation of the price or from being not knowing the sponsors behind it.
Charlie, that's okay. So I didn't know that you were bringing this through a fund. So this is not a direct investment in Parkway Flats. This is
it can be. It can be. So it can be approached in both ways. It can be a direct investment,
okay,
or it can be done through our fund as well.
And do you have other assets in the fund, or is this a de novo?
No, we already have 3 different assets. We've got 2 different assets, and we've got a fourth one. We've got Parkway Flats, and we've got a fourth one on the horizon, shall we say?
That's interesting. So talk to me about gosh, I want to focus on Parkway Flats because that's the deal of the day.
Sure.
But tell me something about the fund as well, because or make the case for one or the other. Like, which would you prefer, to go into the fund, or do you want investors ideally to go directly into the deal? And what are the pros and cons of both?
So what I would prefer is that they go through the fund. And the main reason is because what it does is it allows the investor, let's just say you've only got $50,000. Do you put it into one deal, or do you look to diversify and put it into multiple? Okay. I think most people would prefer to diversify and spread their risk. So by putting that same $50,000 into our fund, you can buy into this deal at a different level, entry level, as well as perhaps, if you like the look of the other deals, like the RV boat storage property that we have, or a conversion from a motel into a multifamily, those returns are slightly different based on their risk profiles, as well as what the intrinsic deal is like itself. And it gives the ability for the investors to pick and choose their own and create their own portfolio. Now, when you do single direct investments, you're now going to be dealing with multiple different people, multiple different K1s, multiple different updates and what have you. Whereas doing this through the fund, you get one K1 for all of your investments. Everything is tracked on a daily basis with our from the back end of the platform, and you get all your information in one location. So there's a lot more pros than cons to the fund.
Okay, and you already have assets in the fund, so you've already got some diversification.
Correct.
Are they all in Houston, Charlie?
No, one of them is in Sierra Vista in Arizona. The RV boat storage property we're doing is a new construction, and that is down in just north of Galveston, in Santa Fe. And we have there's one other component. We're moving into the Airbnb sector as well, that we buy single family or very small 5 to 8 unit properties that the investors can come into and benefit from those. We have our own management company that is already up and running, that we've got several Airbnbs that we do mostly corporate rentals. That's where we focus, which is where the higher level of returns is.
Okay, so that's an interesting range of different kinds of assets. And now you're bringing a value add multifamily to the table. Tell me, what's the overall investment philosophy of Saber Equity, which is your company, isn't it?
Well, we like to diversify our offerings, but we also like to know, mostly it's the people first and then the product. That's my philosophy. Okay, get to know the people, know who you're dealing with, and invariably those deals will be strong deals because of the people behind them. And that's why we make a big focus on who we do business with and who we co-sponsor with, because it's the people behind it.
Interesting. So Saber Equity, what you do is you look for sponsors that have deals that need capital, and then you provide the capital. Is that right?
That's one element of it. Yes. We also we are also GP of our own deals. Okay, so for example, the Airbnb scenario, we are the sole general partners in those deals. We don't look for sponsors, and currently we've not co-sponsored any of those kind of deals. But we are also actively looking for different projects like the RV storage. That is our deal. Okay, so that's not a co-sponsoring deal. These larger projects that bring more stability to the and underpin the foundation of the fund, like the 300 unit, we are not big enough or capitalized enough to take down something of that size right now, but we are able to assist in bringing capital to other parties.
That's really interesting. So how much of your time is spent looking for deals for Saber Equity to GP, and how much is spent trying to find developers who you can invest with?
Great question. So there's three of us that make up Saber Equity. One of myself, I focus more on finding the deal flow. When I've found them and I've kind of initially underwritten them to see that they are worth further consideration and exploration, I pass it on to my partner, Kyle. He's a licensed SEC investment advisor, and he does all of our underwriting. And when we have our own deals that we look for our own loan terms and what have you, he does all that negotiating. And then finally, the last piece of the puzzle, the most important piece, is Sabrina, and she does a lot of our equity raising and capital raising through her connections, both on the West Coast and on the East Coast.
And how does she do that? Is that through personal connections, or
personal connections and work connections? And she's based in Phoenix, so that's why one of our market focuses is in Arizona. And she is a licensed commercial broker as well. And so she has a lot of reach, both in the deal flow and capital raising fraternities.
So what comes first, Charlie? Does the deal come first or the sponsor when you're looking at
the relationship? To me, it's the investor that always comes first. But for us, it's the deal, because depending on the deal is how we then look at structuring it and decide what elements we need or are missing and how we're going to fill that void in that particular deal.
So you find a deal like, for example, Parkway Flats. Can you describe the kind of the journey from discovering that to where we are?
This one was slightly more unique in as far as I had a relationship with Megan Banks, who's one of the co-sponsors, and through having a chat with her, she told me that she'd gotten hold of this deal, and it was with Ian and George. And I said, well, we'd love to be on it if we can and help you raise some of the money. And through that's how we came to be a part of the deal. We underwrote it. She sent me all the information. We underwrote it as we would do any due diligence and performed any due diligence that we would do in any other circumstance. And we realized that obviously it was a very, very strong deal. 10%, 11% cash on cash returns, annualized for a Class A product is pretty spectacular. And so, that's what we look for are these different types of investments that, they're not the run of the mill 7% pref and 15% IRR. We look for something much higher than that. And that's, certainly with the multifamily arena getting heated up as it is right now, it's forcing us to look outside of that to maintain the level of returns that we're looking for.
And due diligence on Park Place. We're going to get back. Sorry, Parkway Flats. Let's get back to Parkway Flats. So the due diligence. What was what did you find? What were the most important aspects of the due diligence that you did on Parkway Flats?
I think really just verifying the rents in place and the rent roll, because with the 2017 build, there's not really going to be too much wrong with anything of the buildings and foundation and what have you. It just hasn't been long enough. So it's really more ensuring that the rents are what the rents are, and where they are, we can push them and ensure that we can generate additional income through that. And like we've talked about, just trying to find what we can do to value add rather than just buying a 96% occupied property and running it as is. There's no real juice on there for the investors. So we have to, look for something to make it worth our while as well as worth their while.
And what is the capital stack on this deal? What's the full capital stack?
So it's 80% LTV. We've got the investors. We're raising, like I say, about 11 million. The co-sponsors are putting in 1 million, and they're prepared to cover any shortfalls that may happen besides that.
And the 80% is bank finance.
Correct. Yeah, it's on an original bridge loan. We've got I think it was 3.65 on the rate, and it's a 211, and we'll be refinancing in year 2. The end of year 2 is our projected timeline to refinance.
And that's because the bridge loan was used for what exactly? How did that start? It was usually you have a construction, then a permanent finance, right?
Sure. Because we wanted to have the ability to refinance after driving some of the valuation and return some of the capital back to the investors.
And what how much are you projecting to return in 2 years?
About 45%.
Interesting. Okay.
Yeah.
And then of course your returns spike dramatically because you got so little money left in.
Correct.
All right, start wrapping up. I don't want to take up too much of your time, but
I thoroughly enjoyed our chat.
Charlie, we're not quite finished yet. A couple more questions, unless you're ready to go on.
I'm free.
All right, good. So tell me, what is this? It sounds a little gotcha-like, but it isn't. What is Saber Equity's secret sauce that makes you different from the other guys out there?
So that's a great question. And I think I was talking about this with Sabrina this morning, funnily enough. We look at things from not just the investors, from a normal syndication side point of view, we look at things differently. We come from a hospitality side. Yes, that's my background. Okay. But we very much focus on the hospitality side for not just for the assets, for the tenants, but how can we make the investors part of the family truly? So without giving too many of our little secrets away, but we look after our investors in a different way to, I think, many other syndicators do.
You got to give me one example.
Okay, I'll give you one example.
Yeah.
So we own and operate Airbnb properties in Texas and Arizona. Okay, we offer to our investors, if they invest with us, they get a little package or a parcel, a thank you, and in there is a couple of goodies and so on and so forth. And one of them is that they get a couple of free nights on us, staying in the Airbnb of their choice at whatever point in time in the future. And it's our way of saying, hey, go and experience Arizona, or come to Dallas and stay in a nice, cute place down on Bishop Arts District.
How nice!
Enjoy
nice
dinner
idea.
around there. And I think that, to me, that's just a bit of a different angle, and it comes from the heart of hospitality, and that's where I come from, and that's where Sabrina comes from, and that's where Kyle comes from. So, and that's kind of why we all meshed so very well and so quickly when we met.
Very cool. All right, so let's let me ask you this as we wrap up. I'm going to start with, let's talk about strengths and weaknesses. Let's start with weaknesses. What are your biggest challenges? Let's put it that way. Saber Equity, biggest challenges today.
Oh, that's a great one. Okay. Our biggest challenges, I think, probably getting our name out there. We know what we're good at, and we also know what we're not good at. And, while we like to think we know a lot of people, getting our message out there and getting people to know about us, that's probably our biggest challenge. But you're going to change all that for us, Adam.
Of course, in the back of my mind, I'm thinking, gosh, I need to dive into your website and your social media channels intensively. We can chat about that briefly. I'll give you some pointers when we finish up. We
can take this conversation offline. Absolutely.
All right. So, what are your biggest strengths, Charlie?
I think our biggest strengths are that the team that we have, we're very cohesive. We're very supportive of one another. And I think most importantly, we all have different skill sets that, we don't trample on each other's toes. I know that Kyle can underwrite things far better and far more concisely and conservatively than I can. I'm in a better position to find deal flow than Kyle is. And so I think, and Sabrina is a very well articulated lady that, she does a phenomenal job with handling the investors, and people just love her. She's easy to work with and easy to get on with. And so when you put all that together as a package, that I think makes us a pretty formidable team.
One last question. So I like to set it up this way. So for everybody that keeps hearing me say the same thing, apologies for that, but you've not heard it. You might have done if you've listened to a podcast. Imagine this was radio in the good old days when you had to tune in to a specific time, not a podcast that is listened to on demand. And the ideal investor is tuning in right now. And the only thing that they hear are the last few sentences that you're about to say. What would you want them to hear and take away?
We would love for you to come and invest with us on the 300-unit property in Parkway Flats that we've got in Houston. We've got several options for you to invest your money. And moreover than that, we've got other options to help you diversify and create passive income for a long time to come.
Charlie Rushton, Saber Equity from West Texas. Such a pleasure. Thanks so much for joining me today.
Likewise, Adam. Thank you, sir. God bless.
If you want more information on this deal and on all the others in this new series, plus if you want access to the latest news from the real estate crowdfunding industry, and if you want to be the first to know about some amazing proprietary industry data that we're putting together for you, subscribe now to the GowerCrowd newsletter at GowerCrowd.com. It's totally free, and it is the most comprehensive source of news and information about real estate crowdfunding anywhere on the planet, all there at GowerCrowd.com. Thank you for joining me and for listening in to today's deal. This is Adam Gower wishing you well and signing off.